Welcome to the Corporate Treasury 101 podcast. In this episode, Guillaume is going to explain to us why interest rates are high today. That's a combination of all of the monetary policy that we've seen over the last few years, as well as the impact of the global pandemic and how governments and central banks have been dealing with the economy up until now, for which we are now living the repercussion. Expect to learn more about what happened during the pandemic from a macroeconomic point of view, what the central banks did, what the governments did, and why that is driving what we need to do today now that we've come to the tail end of the global pandemic. As always, everyone, please do rate us on your podcast listening app, whether that's Apple or Spotify or wherever else you're listening to podcasts right now. It really does help the algorithm so that more people can learn about corporate treasury. Also, go on Instagram, give us a follow there as well, and have a flick through our page. I'm sure you'll get some value out of it. If you have any comments, any suggestions, please do DM us there or send us an email at treasurypodcast@gmail.com. And with that, on with the episode. So we've gone over all of this.
Yes.
Why are today interest rates rising?
So I have a very easy answer to this, because central banks are making sure that interest rates are rising.
Okay.
Now, why will they do that? They want to slow down the economy a bit right now. Now, the more complicated answer is, why do they do that now? Obviously, there are a lot of factors to take into account, and let's try to cover the main ones here. The world has just been through a global pandemic. We are recording this episode in July 2022. And in order to keep the economy flowing, central banks and governments made sure to inject quite some money into the economy during the pandemic, during the 2 years and a half of global pandemic. And even before that, since the financial crisis of 2008 and the euro crisis some years later, central banks kept interest rates rather low to stimulate the economy through investment and development. For the Eurozone, we even faced those negative interest rates we just talked about, because the ECB wanted to give a clear incentive to inject as much money as possible into investment, into making the economy grow again. So we are getting out of a period where a lot of money has been injected into the economy. Consequences take time, sometimes years to occur, as we are just facing right now. And now we are facing quite an inflation, and it is foreseen to continue way above the targeted 2% interest rate, 2% inflation. On top of that, the price of raw materials and productions of goods have skyrocketed in the last month for different reasons. Some of them will be logistics. It has been harder to get certain materials. Scarcity. We all can think about the microchip shortage we all face. That's something that is a topic for quite some time now. And war. Recent events in Ukraine, for instance, made the world more uncertain, and the energy and oil price went quite up because of that. All of this make the prices go up. So inflation goes up, and too much inflation is really bad for the economy. So central banks want to fight against that, and one of the tools is rising interest rates for all the reasons we just mentioned.
Okay, so to recap.
Yes, quite important here.
Yeah, inflation has been very high recently.
Yes.
But there's this intimate link between interest rates and inflation at all times. Right?
Absolutely.
So over the last few years, interest rates have been kept very low to try and keep the economy moving through the global pandemic. So where the global pandemic should have crushed everything,
yes,
governments and central banks have been working hard to make sure that money keeps moving,
yes,
and cash stays very available.
Yes.
Now, they did that by injecting a lot of cash into the economy. There's some crazy stats about how much money has been printed over the last 2 years versus all of time.
Exactly.
So lots of money has been pumped into the economy to keep it moving.
Yep.
And keeping interest rates low. Now, everyone knew that would in the future drive inflation, but it was needed at the time to keep the economy moving through the pandemic.
Yes.
Now we're on the other side of that where, okay, the economy pushed through, right? And we're seeing the aftershocks of all of that money being injected in,
yes,
by having low interest rates, by the way, impacted inflation. And now inflation is 8, 9, 10% in some countries.
Exactly.
Not just
it will be the case. Even in Belgium, like for 2023, they foresee 6-7% inflation rate, which is 3 times the target one, which can be quite bad.
In the UK, it was 9.
Voila, exactly.
Indeed. So the inflation is super high. And again, this intimate link between inflation and interest rates, the governments and the central banks are now increasing interest rates to slow down the economy and bring inflation back down again.
Precisely.
That's the overview.
That's a very good recap.
So interest rates is the lever that governments and central banks use to play with inflation.
Exactly.
Essentially.
Yeah.
That's very, very good.